Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, February 21st. Well, this is the 4-hour chart on the Nasdaq. As you can see, this wedge is resolving to the downside, and I mentioned last week that we were watching this pivot. I was watching this pivot because if we break down this pivot, there's a lot of potential to the downside. And it's actually happening. And I'm super glad that market is correcting based on fundamentals and based on all the news that are happening that we are going to review today. And I was short today, and I'm happy that finally markets are selling off a little bit and trying to correct themselves to find buyers on another leg up that is more healthy than this irrational options manipulated market. So as you can see, this is the move I was waiting for after this pivot, and I'm watching this zone here that, as you can see, was previous resistance, now was support, and I'm expecting markets Nasdaq to reach 11,400 basically. Before checking the open, the chart on the Nasdaq, let's recap what kind of economic data we got today. PMI flash higher than expected and way higher the composite and services at 50. Remember that this PMI above 50 means some optimistic on the producer and manufacturing. Below 50 is pessimistic. Above 50 is optimistic. So actually we were expecting 47 and we got 50. 50 on the producer, again on the PMI, is showing that activity on the producer and the services and manufacturing side is again picking up. And that is good if you are trying to avoid a recession, but it's not good after last week PPI, because manufacturing, services, and PMI overall going above 50 with PPI showing inflation and CPI showing also inflation on the consumer side shows that, again, we are going back to step one in which prices are on both sides with inflation. And this is not good for what Fed are trying to do. Existing home sales, we were expecting 2%. I actually thought this was quite optimistic because interest rates are at all-time highs since last year's. And I think it's obvious that home sales are going to go lower with these interest rates, with these incredible high mortgages. So as you can see, month over month came higher than the previous one, higher than the minus 2%, minus 0.7, but consensus was 2%. I mean, this is showing contraction. This is showing cooling down of the home sector. This is good news because this is showing that still in the home sectors, home sales are still going down because demand is going down due to high interest rates. So the PMI, we will have to take a look at that one, and that was really bad number. So let's now focus on the charts. This is the Nasdaq open. So we were actually going into the open with this wedge, this descending resistance that we broke at this level, and we tried to go up. We basically bounced, found resistance at this pivot on pre-market, not even this one, the first one, find sellers there. And this is where at 45 the PMI hit, and then at 10 home sales sector hit again the market, and this is where I was short at this low of day. And basically we are grinding down and down and down, and as you can see, there's a lot of increasing volume as we go down. This is showing a volume profile in which longs are stubborn and there's long liquidation on the way down. If we check the 15-minute chart, we can see that we are more or less trying to hold this 12,000. We are, I think, quite oversold on the day and also slowly grinding down. That's one of the worst price action to be, because if you don't have risk management, you can see your position slowly bleeding out your cash. I expect some kind of bounce due to this. As you can see, these bottoming tails, this, I think we are going to find some kind of support here. I don't expect Nasdaq to reach again 12,200. So this level, I don't think we are going to be at there. Maybe we will find some kind of resistance here. All these weeks, I think, are actually previous support is now resistance. We'll have to see, and the point of control is also sitting there. So everything is red. Apple minus 1.80, minus 2.40 on Microsoft, minus 3%. Come on, TradingView. Can you please show Tesla? Yeah. My quotes are not going through. So sorry about that. Let's see if dollar can load up. Okay, so let's go to the dollar. As you can see, all the Nasdaq is in the red. All sector funds are in the red. XLK minus 2%, XLY consumer discretionary and financials all in the red. Defensive is also in the red, but less than the other ones. So if you didn't check out my last video talking about Wall Street going defensive, please check that out. I'm going to have a link right now in the upper corner, up right. So if you didn't check that, please follow that, because once you have this kind of setup on the Nasdaq, on the 2 and 4 hour time frame, once you have this kind of setup breaking down and the sector funds are going defensive, you can see that Wall Street is actually, even though I don't think they are participating on this sell-off, on this start of the pullback, I think they are rotating their money, their assets to the most sustainable and more defensive sectors that will hold this kind of fear on recession and high interest rates. So let's talk about what is really interesting apart from the red on the entire Nasdaq. Look at this. Dollar is hovering this EMA, but still holding levels. I'm still bullish on it, and I still think 105 is one of the first target. But look at this. US 2-year yield, 1.16 on the green today, showing this kind of weak rejection. We are reclaiming that and pushing higher. We did actually a higher high today. So we broke down, we broke up, we broke out, and I still think the 2-year at 4.8 would make sense. The 10-year is almost 2% on the day. Look at this. Still stair-stepping up, now reaching this level of 3.90. And I think 4% is the first target, psychological, but this pivot, this line at 4.12 is going to be quite the target. But let's talk about terminal rates. Again, September. Look at this. September this year is pricing in 4.34. And this is a big change on sentiment. We left behind this pivot at 5.23, and we are pushing higher 1% today. And December, look at this. December is key because initially Wall Street bonds market was pricing in an interest rate cut in December from 5.25 to 5, but we are basically not pricing in any interest rate cut from the Fed this year. And this is a big change on the sentiment and a big change for the market, because that means that a lot of people is starting to think about recession again, about fears of huge sticky inflation and Feds going super aggressive and even reaching 5.35 or even 5.50. Let's see what kind of probabilities we are pricing in right now. Let's start with March. March, 5%, 5.25 is starting to increase now at 24%. That means that more and more analysts are starting to think 50 basis points. But let's talk about the mid-long term at the end of the year. Look at this. This is the September that is pricing in right now 5.25. More and more people starting to say, hey, maybe 5.25, 5.50 is going to be the terminal rate, and that is going to be super painful. And at December, they are still pricing in with 35 probability, 35 versus 31. That cut, this 25 basis points interest rate cut is still there, but again, it's too far on the year. And I think more and more, I think people will rotate towards 5.25 now that bonds market are pricing in this incredible move on the December interest rates futures, 1.56% on the green. So we are going to be at 5.25 at least for months. And since March, April, May until September, we are going to be at 5, hovering around 5 to 5.25%. Trust me, this is going to be super painful for all the families, households, businesses, you and me. I mean, it's going to kill a lot of business, a lot of consumer spending, and this is what is really needed to control inflation down, because we initially thought that inflation was going down, but then we saw several reports and economic data that tell us that inflation is sticky and it's not going anywhere. So Fed will continue pushing heavier, more aggressive towards that 2% that I think is at least 1.5, 2 years from now. We'll have to see. Let's go back to the Nasdaq and do the final remarks. Well, as you can see, this is, this is stair stepping down, no break of EMA, no buying volume anywhere. It's just basically in a bearish sentiment, not only because of economic data, but also if you didn't see the speech from Putin saying that we started the war. I mean, take a look at this article, because Putin, it makes no sense what he's saying. Special military operation, as always. More than 1 hour long speech trying to justify Russian invasion. I mean, this is a clown. So if you didn't check that out, check that out. And also, I think more important, because this is the kind of discussion, the kind of speech that they are putting always. But this is more important, I think. Putin suspends nuclear arms treaty with US. And I mean, this is not good. This is not good, because World War III, it's near than yesterday, for example, now that we have this kind of action from Russia. So be careful with this, because I think a lot of analysts, investors, and traders are not only thinking about the Federal Reserve, but also these kind of things. And these kind of things put a lot of fear on the people. And when you have fear, you just go out of the markets, or just rotate to some defensive sectors to avoid any kind of sell-off or big flash on the markets. So be careful, because these kind of things put a lot of pressure on the markets to the downside. So I think that's all. This is what I was expecting. This is one of the things I was sharing with you guys last week, and I think it makes sense. So if you didn't check those videos, please check them out. Stay tuned to the channel, subscribe to the channel, and activate the notifications, because as you know, I upload new videos every single day. For market forecast, market updates, and market recaps, I try to put a lot of effort on these videos to inform you, to share my ideas with you, and to show other markets that may give you an edge. And bonds market right now, since last week, are showing these kind of things, that these leading indicators, these bonds market are trying to tell us that economy is sick, and most probably Nasdaq, with these interest rates and higher interest rates, are going to suffer. So it makes no sense for these tech stocks to be this high. And this was an opportunity to the short side that I think is going to continue. So do your homework, do your technical analysis, and try to find these setups. For me, I think this 4-hour chat was very clear, the breakdown of this pivot. So this is the kind of things I like to share in this channel for you, to provide you an edge, to maybe take some profits on the markets and educate yourself on these kind of things. So I appreciate your time as always. If you found this video useful, please remember to click the like button, and as I mentioned, subscribe to the channel. I appreciate your time, and remember, the trading day is not over yet. I think this is kind of oversold on the day. Be careful if you are trying to continue shorting and selling on this market, because I don't think markets will stay this low. Come on, trading view. I hate when this happens. So it looks like trading view is having some issues with the quotes, the live quotes. So as I was saying, be careful selling, continue selling, take your profits if you were short. Just wait for better opportunities if you were bullish on the day, and discipline and risk management are key for success. Stay safe, everyone, and be careful, because we are again trying to put new lows of day. Stay safe, everyone, and see you tomorrow.